If you are somebody wondering why the stock market is going up despite the economy falling, then you are at the right place. In this video, we will discuss the factors leading to the rise of stock markets even in times of crisis. Before we get started, please hit the like and subscribe button for more updates. On the 8th of May, Dow Jones Industrial Average gained 1.9% and the S&P 500 was up by 1.6%. Despite the unemployment rates in US going up to 30 million, stock market is still rising, and this has caused great confusion for everyone. The president of New York Stock Exchange said, "Stock market doesn't reflect the present situation of the economy. It's important to understand that there is a massive difference between stock market and economy." Let's see what's driving the market. Factor number 1. In March, there was a lot of panic around due to the amount of uncertainty, but things are cooling off now. Investors are speculating positive growth in future and making investments based on the good news published in media. The vaccines and treatments are all based on speculation, so whenever there is good news around the corner about somebody finally coming up with a vaccine, it's being observed that the market is rising, as seen in the case of this pharmaceutical company. Furthermore, reopening of economies and businesses gave hope and instilled optimism in investors. Number 2. The actions taken by Fed are another reason for the rising of markets. Fed, the Federal Reserve System of USA, which usually lends money to other banks which possess a special power to save the economy during times of crisis. Since the outbreak of global pandemic, the Federal Reserve is doing everything to save the economy, such as cutting down interest rates, bailing out airline companies, and issuing stimulus package. On March 23rd, the Federal Reserve announced the asset purchasing program for smooth functioning of market. Since then, the S&P 500 index raised by 31%. Another example of stock market going up due to an action taken by Fed was on March 30th. As soon as the CARES Act got approved, stocks started rising immediately. A $2.2 trillion relief package was issued, which consisted of payments like unemployment benefits, support for small businesses, loans for businesses at loss due to the crisis. Number 3. Stock market fluctuations are not based on the present. Rather, they are influenced by what people think about the future. FOMO, fear of missing out, a popular term used these days due to social media, is another factor playing a significant role in the stock market. Buy low, sell high is the mantra being followed by investors, due to which they are pumping money and the stocks are going up. FOMO is an emotional reaction which promotes people to follow others and invest in market with a fear of missing out on the profits other investors might be making. A quick advice for you: rather than stressing about what you are missing and following the herd, focus on your plan and decide wisely. The best way to deal with stress arising due to FOMO is to acknowledge that it's a natural part of the share market and it happens all the time. Number 4. The big 5 tech companies like Microsoft, Apple, Amazon, Facebook, and Alphabet constitute around 20% of the S&P 500 index. As people are asked to stay home, ordering essentials and spending time on social media is the new way of living. This has proven to be beneficial for tech companies, and eventually they are driving the market as they have major contribution in it. Something one should keep an eye on before investing is the updates about different sectors. Tech companies, of course, are the least affected from this crisis, as they have been performing really well, and this is preventing the market from collapsing. Therefore, investing in these companies would be beneficial, but focusing only on one sector is not so safe. So it's better to diversify your portfolio and invest in different industries.